Money-making muscles need a workout. To the side, big moan. And the other side, big moan. And leaning back, high-pitched moan. And forward, looking forward to a holiday moan. Okay, I'll just put on the screen quickly, just a disclaimer. As I mentioned before, I am licensed by the ASIC in Australia. I can actually give you advice, general advice in managed investments and derivatives. However, my goal is not to, as I said, to advise you. My goal is an educator. I think there's a clear difference between education and financial advice. Certain people in this country can't see that distinction, but I think it's pretty obvious. Education is to teach you how to do it yourself. Advice is more, well, you should specifically do this, okay? We are launching next year financial coaches. My goal is to take 5 to 10% of the financial planning industry, slice it off. I think you'd much rather have access to financial coaches as opposed to financial planners. So anyone wants to become trained as a financial coach, there's an opportunity. We've got positions available for financial coaches, e-mini trader coaches, forex coaches, success coaches. We're hiring people to start that next year. But predominantly, most of our education is to teach you how to do it yourself. You'll find out at the end of this session how you can get access to different support services. And then we're expanding that because a lot of people still want to be able to sit down after they go through all this education with someone one-on-one that's trained in everything that I teach, that can, once again, they're not really there to advise you. I mean, they'll be licensed that they can, but really more there to help you see what your strategy is, make sure it's on track, answer some typical questions, and really help you get started and implement. Because there's many things to implement, it does take time, and that who thinks that they'd like that assistance to have that extra one-on-one support as well. So what I'm going to go through now is we're going to look at the 3 key areas that we can invest in. There's predominantly, everyone starts, jot this down, what we're after is, the word is called synergy. What's it called? Synergy. So what that means is 1 plus 1 equals what? Well, the idea is that 1 plus 1 equals more than 2. By combining more than one strategy with the other, you can get an exponential growth. And I'll explain what that means. So one of the reasons I was able to accelerate my results when I was younger is that I didn't just stick to one strategy, okay? And I'll explain what I mean by that. We all start off with a job, okay? Generally, we'll have a job. Some people come to my seminars, Jamie, and say, what if I don't have a job? Okay, well, what should you do? How long does it take to get a job in Australia? Not very long, okay? So you need some income. Unless you're already independently wealthy, well, then you don't need a job. So what we're then going to do, there's 3 things that we can do. We can start a business, okay? After lunch, I'm going to spend some time teaching about business. So if you want to learn about that, I won't go into this session. Then the other areas that you can invest in, of course, is what? In the property. And then there is the share market. In the US, they call it the stock market. So there's the 3 predominant areas. Now, if you're investing in the stocks and the shares, you're really investing into other people's businesses, other companies, okay? The most common way in Australia, in New Zealand, that people have become wealthy is that they've taken their surplus income from their job and they've invested it into a house, and then they've invested into investment properties, and over time, that's been very good to them, and Australian real estate has continued to climb. Even through one of the worst credit crises on the planet since the Great Depression, Australian real estate did very well. Okay, I can remember there's a gentleman in Australia called Professor Stephen Keen. Has anyone heard of Professor Stephen Keen? I haven't actually met him, but him and other people, that so-called experts in the property market, were basically saying during the credit crisis that Australian real estate is going to crash 40 or 50%. He was so certain of it that he went and sold his property in Sydney. And he was making these comments publicly. I went on to radio at the time, did a lot of radio interviews, and I said that I don't believe it to be true. I believe Australian real estate will grow 20% before it ever crashes 40%. No one knew what was going to happen. Now, why did I and others believe that it was going to grow? Why were we so bullish on the real estate market when others thought disaster was coming? Okay. Now, as time turns out, and that's several years ago, we found that Australian real estate, especially in cities like Melbourne, etc., has grown since then by upwards of 20%, has been very successful, and the Australian real estate market never crashed. Some areas got soft and went back, but most areas didn't take that much time. They were back above the prices. They dipped down and have grown. Okay, didn't crash the 40, 50% that was predicted. And as a result of that, Professor Stephen Keen lost his bet and had to walk from Sydney to Canberra. Okay, no offense against him, but he is a what? Well, I didn't say that. Okay. No, he's a professor. Does it make sense? He is a professor. So it's theory. The difference is he was not a successful real estate investor, so he doesn't have the additional fundamental knowledge that is handy to have that can give you a better prediction or preempt the future better. Okay? No one has a crystal ball. But a lot of analysts, a lot of financial commentators that ask about property, they're often asking share analysts and economists, etc., that are not successful property investors, so they don't have the innate knowledge that someone that's been in the market is actually doing. Making sense? So as a result of that, they were basing their analogy on what has happened in the credit crisis with US property and the UK property. And they were basing it on the income ratios, etc. UK crashed, the US property market crashed, as we know, and as a result, they were going, the Australian property market's going to follow. So people freaking out. But guess what happened? It didn't, because there were certain fundamentals. So I wasn't going to go into this now, but let's go into it now anyhow. So why did I preempt that it wasn't going to crash, was more likely to grow? I actually remember doing a blog article in the midst of people thinking it's going to panic, saying there's another property boom coming. And people thought I was crazy, okay? But guess what? It ended up happening that way. Now, I'm not saying Australian real estate may never crash in value, but I'm saying it wasn't going to crash then. Why? Will you tell me? Is the Australian property market different to the US market, yes or no? Yes. The US market, did it have an undersupply of property or massive oversupply? Massive oversupply. Australian property market, did it have a massive oversupply or massive undersupply? Massive undersupply, and growing at, and still is growing massive undersupply at very dangerous rates. Very dangerous rates. And during the credit crisis, did the banks try and stop the undersupply by going, oh, let's loan more developers more money so they can catch up with the amount of properties Australia needs? Or did they take away the finance and lending? Took it away so they couldn't even build. We had more properties needing to be built, but the developers couldn't get any money, so they couldn't build any, so they're building less properties. They dropped from 165,000 properties a year to about 155,000, when we need about 190 and we'll soon need 200,000 a year properties. They predict within less than 5 years we'll have a 500,000 shortfall of properties. Is that concerning? Well, concerning for the poor person that has never bought a home, because how much they're going to afford to be able to buy these properties. Okay? If you own property, you're probably not too bothered. The only concern is you don't want it to go too high too rapidly, because then that can create a property bubble. Making sense? 1980s, they said Sydney real estate is too expensive, it'll never go higher. What happened to it? So it doesn't mean it will always go higher, but it does mean that there's a few factors we want to consider. The Australian population in the last few years, was it declining or increasing? Increasing a little bit or rapidly? The record rates of increase ever. Okay? 440,000 people in one single year. 330,000 of them immigrants, the rest babies. The Costello bonus, okay? We want Australians to have more babies, and it works. Amazing what $1,000 can do. I'm going to go and get pregnant for $1,000, okay? But it worked, okay? Because we need it to boost, because we need more workers. We're this rich country, not enough people, and all these resources that the world wants, okay? So as a result, we had record immigration, 330,000 hit, okay? It's dropped back down this year, okay? But it's still above 250,000 new immigrants. Like it was even in the debate, remember, about population growth, etc. So it's still record. So massive population growth coming into the country, is that going to cause the property market to crash 40%? It just can't see that. What about interest rates? Interest rates went up or down during the credit crisis? Down. They went down to the record low, lowest in 54 years. Let's think about this. Do you have to be a sophisticated property investor? Do you have to have an economics degree, be a so-called financial commentator, to figure out this? Interest rates, they're declining. Will that cause people to panic and sell their house at record lows, yes or no? Won't, will it? If interest rates are coming down, people just, that means it's getting cheaper to own my house and keep my house on investment. It's actually getting easier. See, there were some positives of the credit crisis, especially in Australia, because we didn't really have a crisis other than the imagined one. Okay? Was that interest rates come down? And property investors go, this is pretty cool, unless you're locked in fixed rates, which you should never do in 9 times out of 10 in Australia, at least. And as a result of that, so once again you're going, interest rates coming down, not up, that should not cause a panic, that should not crash the market. Massive immigration. Massive undersupply that's not going to be solved in the short term. All these things are going, like, we can teach a teenager to figure this out. That's going to put a ceiling under the property, possibly lead to another property surge. That's what it's predicting. That's by just looking at that basic analysis. Not getting caught up in the hysteria. Sticking, to jot this word down, fundamentals. If you can stick to fundamentals, you'll be able to preempt the future better than those that get caught up in hysteria or simply have no idea what's going on in the world, which is most people. Okay? So as a result of that, now some people say, but it's a recession, we're going into recession. Will that cause property prices to crash? Well, we don't know. Study history. The last recession, the recession that we had to have back in 1991, okay, when I just left school. See, most Generation X and Generation Y didn't even know what a recession was. We never actually experienced it. We had 17 years of uninterrupted economic growth, a recession, and then we thought the Generation Y is going to teach them a lesson. They think they're so smart, they just skip one job to the other, they don't care. But Generation Y, I thought, handled it very well. Generation Y, they have a great mentality in most cases. They have no fear. When I was growing up, the idea of being young, successful when you're young, was like it's a big limitation. I thought I was too young to be successful, and that held me back for a lot of years. Now, like, if you're young, it's a major advantage. Is that true? Mark Zuckerberg, Facebook, a massive billionaire when he was 24, the world's youngest billionaire. Kids used to go seek their grandparents for wisdom. It's true. Grandparents now go seek their grandchildren. What the hell is Facebook? Okay. How do I turn this computer on? Do you know what I'm saying? It's like the roles reverse. The young have such an opportunity, and also they have less fear. They'll happily quit a job and go overseas for a year, or change jobs. No, the past generation was like, you get a job for life. You never leave that. You just work hard. Now would you teach your children, you got to go to school, get a good education, your goal is to get a job for life?
Yeah, where is it?
You wouldn't teach that, because they're going to change. Most careers they'll go into don't even exist yet. Okay? That's another challenge with the education system. Well, they don't even know what the world's going to be like. It's already outdated. You need to be teaching what the world will be like. Okay? So as a result of this, if you check history in a recession, the last recession, did the recession cause the property market to crash? Yes or no? Some of you may not remember. I'll tell you the answer. No. What about record unemployment, though? The unemployment was going up in the credit crisis. Okay, will that cause property prices to crash? Well, you'd think possibly. Check history. The last time unemployment was going up in the recession, it didn't. What if interest rates change and go up to 18%? Will that cause property market to crash? Possibly, but check history. Last time we went up to that, it actually didn't either. So once you start seeing all these things, you go, Professor's saying it's going to crash. Fundamentals are saying it shouldn't. It gives you a much more confident future. And there's a lot of our clients as well that went out, continue to invest in real estate, and have done very well. Especially, also, if you know cycles. We've taught people for many years. Certain cities in Australia will boom at certain times. The first city to boom generally out of a cycle is which city? Some of you aren't sure. Okay, there's not that many cities in Australia. Take a guess. Melbourne is correct. Melbourne is the first city to boom. So if you knew that at the beginning of the cycle, because remember Melbourne, Sydney was flat for some time leading up to that, you go, which city's first to boom? Melbourne's first to boom. As a result of it, those who are investing in Melbourne, they made their 18-20% in a year. It's slowed down now, okay, but in the last 18-24 months, okay, even a 12-month period, went 18%. People did very well. What's the last city to boom? So we're not sure. Someone said Adelaide. Where the hell is Adelaide? Does anyone know where Adelaide is? Don't worry, most people don't either. Okay? Not picking on Adelaide. Great city, actually done very well for real estate. Before many years it didn't grow, and then it's grown. And a city of the future. Perth, last city to boom. Remember when the rest of the states on the East Coast were fairly flat? Perth, people making a fortune. Our Perth clients are so rich, they don't know what to do with the money. Okay? They made so much money off the plan, even real estate over there, boom. Okay? And then it was the last one, so the cycle starts up again. Sydney's recovered and did quite well. Brisbane is a bit of both. Brisbane, because you're in the southeast Queensland where everyone wants to move and live to, it's a growing city long term, has massive potential. But it used to be very cheap years ago, remember? And Brisbane then took off long term, be a fairly healthy city. And also Queensland is tapped into the mining industry like Perth, so that gives it that extra impetus. But there's also regional cities growing, etc. So by knowing that, then you can break it down and go, what suburbs do better than others? So the more knowledge you have, the more understanding, the more confident you can be. Because if you're freaking out thinking, real estate's going to crash 40%, I'm not going to buy it, where other people went out and bought it and it's rose 20%, they're becoming wealthy and other people are missed out. Okay? What's going to happen in the future? Well, who knows? But I can tell you this now, that we are global investors, so you should not just look to invest in Australia. Can you invest anywhere in the world pretty much? Yep. The US, I'm going to go into this later, but the US has went down, is it true? It's crashed massively. There's homes right now that were $700,000 that can struggle with $150,000 for. Those homes that was $300,000 you can go and buy for $50,000, $60,000. Do you know that? Did they teach you any of that yesterday? Okay, those who are watching this at home, there'll be another DVD. I'm not going to go into too much detail, but there'll be another whole DVD you can study about the US property market, and you guys will get access to it as well. The point is, imagine in Australia if homes that were $300,000 a few years ago, you could go and now buy for $50,000. Who would probably buy more property? Okay. Imagine this, so let's cover it now, I might as well. Let's say $50,000 is the price of a property. US. Wow. That used to mean something, is it true? No offense to our US friends, but our Australian dollar is doing pretty well now, so that's quite cheap. That's another reason it's advantageous for Australian investors. I'll predict a trend. Jot this down. Jamie's predicting a trend that's going to happen in Australia for the shift in investors. There is going to be a gold rush of Australian investors going to the US to buy up the US property. That's my prediction. We are now, what month is it? We're now recording this November 2010. See what happens. It's already happening. Australians love property, true, we're pretty savvy investors, and we're also willing to have a go. We also know our dollar is now equal to the US, potentially go above it, and things in the US are very cheap. US is on a fire sale. Okay, so last 50 years the US has bought up the world. Now the world's going to the US to buy up the US. Okay? Times have changed. When you hear the cliche, once in a lifetime opportunity, always sounds too good to be true. We have a unique opportunity, why we're alive, for a country where its real estate is for nothing. That just generally 3 years ago you wouldn't have thought that was possible, but now it's possible. The question is, will we as investors, if we want to create wealth, will we take advantage of that? Or will we be alive at the time when they talk about what happened in that time and the opportunity that there was? Foreign investors around the world right now are heading one country, US, buying it up. Does that mean, Jamie, the US property market, what if it doesn't recover for the next 10 years? What's going to happen in the US economy? Okay, exactly, who cares? Here's my prediction. It's most likely the US economy will struggle for 10 years, most likely. It'll be a Japanese-style recession, could go for 10 years. However, there could be some upside of that, and it may actually recover well before that. The US has a lot of great companies. As the dollar gets lower, its exports get cheaper. And what's happening also now, Australian retailers, I can remember Jerry Harvey saying years ago, I just don't understand the internet. I can't see how retailers will ever shift to the internet. Because he's old school, old model, couldn't understand that. Now what are retailers, in the last 3 or 4 months, what has happened in Australia? Where are people now shopping? Where are you shopping? Online buying the US because it's so cheap, you can buy stuff from the US. It used to be China that was cheap, now it's the US that's cheap. So retailers, a lot of industries are changing because you just go and buy things because our dollar's so strong. Australians on the world stage are so much richer because it's recognition also for how rich our country is. So that gives us opportunity, what we want to do with it. So some people say, well, Jamie, I was holding back saying don't go to the US property for the last 12 months, 18 months, say just wait. It's getting closer to the bottom. I think it's close to the bottom. Some areas will go a little bit lower. Some areas are recovering already. It depends, like any city, there's different suburbs. Any country, there's different markets. So you still got to do your homework. But now, what if you had a plan and said, okay, what if the US economy doesn't recover for 10 years? Well, it takes a decade to get its act together. What if US prices never rise, property prices don't rise for 10 years? Can you still profit from the market, yes or no? If you're making, see, the thing is, US property prices crashed. Rental prices, guess what? Didn't crash. You get 15, 30% rental yields. Who cares? You can buy a property for $50,000. It used to be $200,000, $250,000, $300,000 that is cash positive. Can you do that in Australia? No. So the difference is this. We right now as well investors, we can go to the US, we can buy 10 $50,000 properties for $500,000. Most investment properties in Australia are how much? $450,000, $500,000. Actually, in Sydney, if you want to buy a house, could you buy a decent house in Sydney for $500,000? No. For $1 million? In the suburbs you want to live in? No. $1.5 million? No. You'll have a $2 million house and be living in crap. You can go to the States and buy $5 million mansions now for $1 million. And absolute beautiful homes. Is that amazing? Okay. So my point is, 10 properties, if you had $500,000 cash, do you have to pay cash for US properties, yes or no? If you're the normal investor, don't know what you're doing, you don't have access to contacts, generally it's almost impossible to get finance. I don't know whether Stephen's speaking later for you today, but you're going to get this information available as we're about to start teaching it. As it's being taught this weekend to a lot of our members. As much as 75% LVR. No one else can do this, by the way. This is private money. To go, and we're dealing now with US wholesalers that have given us line of credits up to $30 million. What they do is they go in and buy up mortgages off the US banks. They're just happy to get rid of them. They fix the properties up. They resell them. Okay, about $1,000 a month they trade, wholesalers. Okay, if you've got $30 million US spare, you can go and do that. If you go knocking on the bank's door, Wells Fargo or some of the banks say, look, I'm from Australia, I just want to buy 1 or 2 properties. Can I buy some mortgages off you 20 cents in the dollar? What are they going to say? Well, you're not even going to get to knock on the door. But if you've got $30 million, you can go and do this sort of stuff. So there's US wholesalers that will do this sort of stuff, that have the money, and you can access these sort of deals. Okay? But generally, you still have to pay cash. If you can get 75% LVR, how much is a $50,000 property? $12,500 cash? Outlay for property. How many properties could you buy? Who's getting excited by the potential? I'm not saying that's the only thing you should do. I'm saying it's one opportunity now as an Australian investor. You are rich because the dollar's so high. The US property prices are so low that even if they never grow in value for a decade, you can profit from it. Here's what I think is likely to happen. The US will probably recover sooner in that period of time. Certainly some areas will. They've got too many companies, they've got too many quality people that they're going to have to be able to get themselves back on the feet. May take a while, but if it does and the US market recovers inside 10 years, you make an absolute fortune. If it doesn't, you'll still make a lot of money. Who's following what I'm saying here? Okay? I don't want to get off on a distraction, but it's quite exciting. So I'm going there to buy property in January. We're looking forward to that. Having my teams over there, sourcing, buying property, etc. So we're excited about that. So that's something as an investor that is exciting because it's not just Australian real estate. I'm not saying don't buy Australian real estate as well. I think you should diversify. Capital growth in Australia, cash flow in the US. Once again, by combining strategies, you can do quite well. Other strategy you can do in real estate is land. They'll be teaching more of this anyhow. I don't have enough time to go into detail. Land strategies is that land appreciates more than house generally. Generally, houses depreciate. You know, when you get your tax write-off. Land appreciates. I know a very successful gentleman in Sydney. He was used to be very well-known developer many years ago. He's retired now, and he's basically interviewed Financial Review, and they asked, so what's probably the most common way, or what's the way people could make a lot of money over time? He said that by far the most effective strategy is what all these big land development companies do is buy large amounts of land. These people bought them back in the 70s, etc., and just sit on it for 20, 30, 40 years. This goes up in value. It's true. Who would have bought, if you had a lot of land back 20, 30, 40 years ago, how rich would you be? So land goes up in value. There's ways now to do deals where you can buy land, for a deposit. So the downside of land, though, is that you have no income on it. So the downside, you're paying interest, you don't get the tax write-offs, and you have to fork out. That's the downside. But if you can eliminate where you don't have to pay interest and can delay a settlement on your land blocks for a decade or so, then you don't have to pay for the land, nor pay interest on the land for, say, a decade. But you get the appreciation and capital growth of the land. Repeat after me. Something to think about. But once again, if you went and knocked on the developers that own massive amounts of land, this is what developers do all the time. They'll gradually buy all this land, they'll divide it up, change it from farmland, divide it up, and they'll sell it off bit by bit in stages over 5, 10, 20 years. And they'll keep holding it because they're not going to sell it all in one go. They hold it, and as they sell it, the value of it continues. Because also they are increasing the market price as well, because people want a new house and block, and over time, land rises. That's what happens around cities, and it's been happening for decades. But if you knock on their door and go, I was at a seminar, I'm really inspired, I want to go out and buy some property, will you sell me three land blocks? But I don't want to pay you for 10 years. And I want to make the capital growth, not you. And what are they going to say? Trust me, I've had conversations that basically told me to go shove it. Okay, a lot of developers. I know exactly what you're trying to do, and we're not going to do it. But in some cases, you can get, because you've got to be able to, some developers, if they need something, let's say they don't have funding, and we can bring them large amounts of funding, okay, but we want something out of it. You give us what we want, okay? So we've been able to do strategies like that where people can participate in that. So instead of needing 100 grand for a block of land, you just need a deposit, and you pay the rest of it in 10 years. Or, if you do it with an option contract, you can flip them, okay, before you have to pay for them. So there's a lot of more advanced things that you can do, but what we've tried hard as an organisation is to make available sophisticated strategies and make them more mainstream through education and services. Okay? So who's excited by some of that stuff? Okay? It wasn't what I'm going to talk about. Let's go into some of this other stuff. So property, you can do a lot of things. So the idea is, though, we're diversifying, combining a multitude of strategies, or you can just do one strategy, whatever works for you. We've got to get started. 8 steps to getting started to becoming a millionaire. There's no point getting excited about investment strategies if you don't have any money to invest. So we've got to come up with some ways to invest. Number 1, if you have no money to participate in the strategy that you're going to be learning, then can you save it? Yes or no? Yes. Absolutely. If you have to save it up so you can get started. I had to learn how to save a lot. Number 2, can you sell something? What I mean is, you don't have to join Avon or have a Tupperware party. I'm saying, could you get rid of some junk? How many people have spare furniture, spare fridge, spare boat, spare car, spare spouse, spare children? Anything you can cash in now and get upgrade later. I'm joking, okay? My point is, now that will cost you if you do that. The point is that you can cash some things in you might be wasting or not need. That might be your $5,000 or $10,000 as a deposit on a US property, or deposit on land, or $10,000. Do what John started with. He's making $40,000, $50,000 a month, starting with selling insurance. It might be just what you need to get started. Okay. Otherwise, you work a bit harder, put some savings aside. Number 3 is go to work on your income. A common thing, when I rarely coach people one-on-one, the common thing is they neglect their job or their career because they just can't wait to get rid of my job quickly as possible. I'm just going to focus on investing, and then neglect that. You want to boost and accelerate your income, because that will fuel what you do. And then we teach more of that as far as how to get pay rises, how to renegotiate your contract, how to be more time rich in what you do to be more effective, so you're not just chained to a desk. There's no lifestyle if you have to show up to a desk to get paid money. You can change that. Number 4 is you can tax. Most people are paying way too much tax. So there's ways by being an investor you can legally minimize your tax. Now, we live in Australia. Those of us that live in Australia, if you don't pay your tax in Australia, what will they do to you? You don't know what they'll do to you? They will send you to jail. They're sending a 70-odd-year-old couple to jail shortly. Over $120,000 tax they didn't pay. They tried to rip it off by doing an offshore thing. And only $120,000 is all they say. They fine them and add penalties. The poor couple have to pay now $750,000 back and the 120,000 they didn't pay plus the penalties, and they're basically going to work the rest of their life to pay the debt back, plus they get to go to jail. Why? Because they want to send a message to you, pay your tax or we're going to get you. So there's legal ways to minimise your tax in Australia, especially through property investing in particular. That's quite advantageous to you. So do legal ways. If you're going to go the offshore stuff and get into advanced creative stuff, you've got to be doing it properly, and you want to be careful because Australia has a very bad reputation internationally for, things that they do. So do not go straight to jail if you don't pay your tax. It's not worth how many wealthy Australians now are freaking out in case they get investigated because they've done offshore stuff. That you can do offshore stuff legally and illegally. If it's not done correctly, then they will pay a price for that. And there's that wealth. If you're stressing out that you might have to pay massive tax and go to jail, that's not freedom. So be smart. Number 5 is other people's money, OPM. So if you don't have money to invest, what if you did this? 22-year-old 21st century member, many years ago, he decided to do some investing, so he was willing to borrow $40,000. I'm not telling you to do this, I'm just telling you what he did. Okay, he was willing to weigh up the risks, be educated, and make his own decisions. He got $40,000 through a personal loan. He had a salary, he was able to get a personal loan. He wanted to do some renting shares. Okay, so he started. So a lot of people say, borrowing money to invest in the share market, that must be highly what? Risky. The question you should ask is risky compared to what? What is your alternative? Yes, there's a risk to borrowing money to invest. But I'm going to suggest to you the risk is less than what most people do. They borrow money to do what? Spend. Ask our US friends. They borrowed against their houses at the height of the boom and spent all the money. Okay? Australians that borrow to spend or borrow for a car. People go, oh, it's risky to invest in the share market. If I borrow $40,000, I go out and buy a car. Because I don't want to, investing equals pain and risk, and I buy a car. It makes me feel good. They link pleasure to the car. In 10 years' time, what is their $40,000 car worth? 5, 2, 3, 4, 5,000, depends who's driving it. Okay? Pretty much it's declined, we know. Every time they pull up at a service station, does it pour more positive cash flow into their pocket? No, but that's not risky. Everyone needs at least 2 cars, right? Where they could have went and invested, whether it's in real estate as a deposit, or in these days could pay cash for an overseas property, or in the share market, and even if the stock didn't perform well, they've got the opportunity. But if they're calculated and educated, following some simple fundamentals that we model off Warren Buffett for investing, then their chances are pretty good. Then if we add to that a cash flow strategy with $40,000, if you're doing what John's doing right now, that can make as much as $4,000 a month on $40,000. If you're only half as good as John, you'll be making $2,000 a month. Repeat after me. Something to think. If you're only a quarter as good. The point is, but then what he did, the 22-year-old, he knew he could also margin loan. Jot this down. He bought $40,000 worth of stock because he wanted to rent it out. He also knew he could margin loan, so he got a margin loan through our brokers, and they arranged another $40,000 facility, which is quite simple, margin loan for stock. That gave him $80,000. Is that risky? Well, he was taught how to insure his positions if he wanted to, and he was taught how to rent those shares out. So he's borrowed money, but he's borrowed the money, invested into an asset. If he's done his homework, he's invested into a good asset. There's a potential to rise, but predominantly he's after cash flow. Okay? So if he can make 5% on that, what's he make per month? $4,000. If he can make 2.5%, what's he make? $2,000. He's got some interest to pay, but does he have to pay the margin loan back every month? No, it's capitalised, and he obviously is already saving. Let's say he's savings, he's paying into savings. He can use his savings to pay off his personal loan. He has an asset. Making sense? So even if you don't have the money, there is ways sometimes you can look at borrowing it, but there's only certain strategies that you should borrow money for. Okay, so other strategies it would be considered speculating that I would not recommend borrowing money for. Number 6 is equity. The most common way most of you already have started or will start is you have some equity in your house. Okay, let me give you a quick analogy of that. Let's say you have a house that is worth $400,000. Okay. And what if you have a $200,000 mortgage? There's a few things that you can do. First of all, one simple way to make, say, who would like to know how to make $30,000 out of thin air in the next few months? Okay, very common strategy now. A lot of people now do this. Many members have done this as the simplest way to do it. Is they can go and fix up their property. Let's say it's their house. It's worth $400,000. They go, okay, what we're going to do before we get a line of credit on it, we're going to fix it up. Might spend $15,000, $20,000. You've seen the TV shows before that made it mainstream, The Block, where you fix up the house. Just cosmetic surgery. Make it look better, nicer house, and they invest, say, $20,000. The house, they improve the house, they get it revalued. The house is revalued at, say, $450,000. So they've increased the value of the house by $50,000. They've spent $20,000 doing that. How much have they just made out of thin air? $30,000. Who's done that before? Has anyone done that for an investment property? A few people in the room? How much did you make? Do you know? Do you remember the figures? How much did you spend? 17, 18,000, and you got and increased it by 80,000. So in that case, you made $63,000. Exactly. See what he did? Give him a hand for that. It's a good example. So what he did, he spent $17,000. Was it on your house or on your own house? Yeah, it's on his own house. Spent $17,000, and it increased the value by $80,000. Okay, $63,000 out of thin air, effectively. Because then, guess what you did? You probably then went and got a line of credit. True. Yep, which you probably use line of credit to actually increase the. So you had some spare capacity here. So then what he would have done was be able to do this. Let's say the house is now worth, it's worth $450. A line of credit on $450, let's say max is 80%, depending on your income. What's 80% of $450? 80% of $450, come on folks. You've got to think to be rich. $360? In this example, there's $200,000 mortgage. Is that true? So there's a $200,000 mortgage. What's the gap in between $360 and $200? $160,000. In this example, there's now $160,000 available in equity that can be drawn out of that property and done whatever you want with it. You could actually go on a holiday with it. You go buy a boat with it. However, would we recommend that? Yes or no? We're only going to borrow against, because some people go, I've been working so hard to pay off my house, the last thing I'd imagine is risking the house. Understandable. However, in life, there's a risk to everything we do. Let's say we don't. Well, let's wind the clock back 10 years ago and look at some Australians. Let's say one person said, okay, I'm going to use some of this equity, I'm going to take some of this out and put it down as a deposit on 2 investment properties. And let's say they did that 10 years ago. So they took some of their money out of the house and they bought 2 properties 10 years ago worth $300,000 each. Because they faced their fears and they believed they had foresight that in the future they would do well. Others, I've been working hard to pay off my house, I don't want to take the risk, so all they do for that next 10 years is keep paying down their mortgage. Okay? And buying lotto tickets. Because I think the only way to get rich is to win lotto. Okay? Because it's outside their control, so it's all right. They don't have to face their fears to win lotto. So they just buy lotto tickets and paying off the house because they want to be safe and secure, don't want to take any risks. The other person buys 2 investment properties, does reasonably well, does some homework, just buys them at market value. So in 10 years' time, they check in on these properties. What are they now worth in Australia? They bought them in capital cities, good areas. They're probably worth $600,000. Some suburbs more. So combined now, they actually have created extra $600,000 in equity. Also over the 10-year period, has rents increased significantly. So they've been able to use the excess rent over time to pay down the mortgages on these properties, plus they have equity in them. But they've created an extra $600,000 equity overall, $1.2 million property portfolio, an extra $600,000 in equity. Now, the other person that's paying off their mortgage and didn't want to take a risk, they now have to win lotto to catch up with this person. Because that in another 10 years is likely to have risen again. Making sense? So those who actually act don't need to win lotto because they end up being equivalent of winning lotto. The other person to try and save $600,000 and catch up to this person, what chance do they have? It's not going to happen. They missed the boat. It's like catching a train. It's easy to get on the train when it's standing still. But as it starts to take off, the people on the train are sitting there sipping champagne, relaxing. When you're sprinting down the side of the train, sweat coming off, you're trying to catch the train. You're working your butt off. You've got to be on the train. And most people miss that. But Jamie, that's all right, 10 years ago, but what about the future? Just like 10 years ago, people were worried about the future too. And some acted still regardless, or others didn't. Now the future is very good because you have two choices. You don't just make money in Australia, you can also make money in the US. You have a dream opportunity which 3 or 4 years ago no one could envision happening. So there's opportunity for those that take it. Is this making sense to everyone? I mean, these are some fairly simple, fairly commonly used strategies now, but those that do it make a lot of money. Go out and that's how you get started into other property. Okay? Let's go back to number 7. Jamie, you might say, well, it's all right for people that have some equity in their own house. What if I don't have any equity? Well, that's what your parents are for. Okay? You could possibly use your parents' equity. Yeah. That's why teenagers love coming to the seminars. Now, it doesn't mean as a parent you're going to necessarily let your kids use the equity. However, what you may do is, what would you rather? I'm asking you to go guarantor on a loan to buy a car or to buy a property. Yeah. Most of you rather than you can help the family increase its wealth. And that's how many Australians get started. Their parent helps them buy their first investment property. Number 8 is superannuation. Many of you have superannuation money that's building. Your employer is putting 9% or more into your super. It's building up your account. You can change that to a self-managed super fund if you wish, and you can use that to invest. You can even buy US property with your super money. Who would like to use super money to buy US property? You can do that. You can do land deals. You can do share deals. You can use your super money for a lot of these things. If you understand how to do that, those who are watching from the US, you would call that a 401k account. In New Zealand, they don't have compulsory super. They're only just starting to get into super. But in Australia, you have a lot of super sitting around. Most of you can actively invest that and get higher returns. So here's what I want you to do. Look at those 8 ways. Circle which ones are those you're currently using. Okay, highlight the ones you could consider using to raise some more money so you can get some money to start investing, and turn the person next to you and share with them. Go for it quickly. Give you a couple of minutes. Raise your hand if you're excited yet. There's tremendous opportunity and potential, having the right psychology and then understanding strategies. You don't have to understand it all straight away. I'm not, we only have a few hours together, but if you want to continue learning more of this, I'll mention at the end, before we go for lunch, how you can become a 21st Century member for those that aren't, and how you can access a lot of ongoing training as little or as much as you want. But not only education, what we also find is people need support services of people, like-minded people, that can help you implement the strategies as well. Like one question someone had on the US property, yeah, but if I'm in Australia, how do I manage my property? How do I look after that and things like that? Well, you got to understand this. To every problem there is a solution. Okay, so 21st Century members, for instance, will get access to support services of how to find those properties, organisations that will manage those properties, that we do deals with to lock them into long-term guarantees, etc., where one-on-one you just don't get access to that. Okay, but as a group, we can go and negotiate and do a lot of things that normally we couldn't get access to. Okay, so a lot of those services help you implement things. So you need education, you need support, okay, and that together and as working as a team, you can achieve a lot more. Okay, let's look at the where we now invest this money. We've found different ways. You've come up with some money, and let's go and invest it. Let's look at the share market, shall we, and what we can do there. Now, predominantly what I'm going to be teaching you is how to go about extracting cash flow from the market so you can make as much as you possibly can from doing that, ideally to supplement or replace your current income. If you can do that, okay, while people work 40, 50 hours a week to make 50, 60, 100, $150,000 a year, whatever you earn in your salary. If you can make as much money from not having to work, so you can supplement your income. So let's look at some share strategies. Let's look at a share called XYZ, and just drop this down on your piece of paper. Let's say the share has been at $16 and been up to $19. So one of the first things we're going to have to learn, if we're going to buy shares, even if we're going to rent them out or whatever strategy we're going to use, we need to know what shares to buy. Okay, we need to have a formula how to go about doing that. I don't have time to teach you that right now. It's a whole seminar in itself. But those who want to learn more in the more advanced training, we'll go through the criteria. And one of those criteria we go through is Warren Buffett's criteria, which are incredibly simple but incredibly effective to have you successful. And if you break those rules, you'll stuff up the strategy. Okay? You don't want to be a cowboy. You want to stick, and the big word is this, jot this down, you want to stick to fundamentals. The people that do that make the most money do it from fundamentals. Now, there's two forms of analysis. One is technical analysis, and one is fundamental analysis. Both can be very good. Fundamentals is looking at the profit and loss of companies and looking at what's likely to happen to a company over the long term. If it's becoming more profitable and growing, its share price is likely to go up long term. Technical analysis is looking at the short-term trading patterns of stock over a shorter period of time. It's much more difficult to predict what a stock can do. Some stocks will go down despite their profits going up, okay, in the short term. If the whole market is going down, it can drag very good companies down with it. So this technical analysis looking at short-term trading patterns of a stock. Both skill sets are very good to have. I'm more of a fundamental investor. If you're only going to have one skill set, you have to have fundamentals. You have to know fundamentals of investing, stock market, property, etc. if you're only going to know one skill set. Or you can learn both. Okay? But a lot of these strategies, you don't need to understand technical analysis to actually do well. You can get that information from other people, or you just stick to the fundamentals. Fundamentals, Warren Buffett, is he into technical analysis or what? Fundamentals, okay? If you understand fundamentals, I think it makes you a better investor. You also got to understand, the question you got to have is, are you an investor, okay, or are you a speculator? So you can be an investor, you can be a speculator, or you can be a gambler. Some people are confused and think investing is gambling because of the way they do it. Australians love to gamble. Melbourne Cup this week, people love to gamble. It's a promotional week for enticing people to become gamblers. Australians love it, okay? But the point is, are you an investor, speculator, or gambler? I'm an investor. At times I may speculate. It's okay to be a speculator as long as you what? As long as you admit it. Because you're speculating and don't admit it and think you're just investing, then you're now a gambler. I'll give you an example when we go through. If you're a speculator, it's okay to speculate as long as you admit it, that you're speculating. Okay? Otherwise, you just be a fundamental investor and stick to that. In some cases, I will speculate and I will take, but I accept I'm taking on a risk as a speculator, and I accept that that's what the risk is. I'm not kidding myself that I'm not speculating. Okay? And I'll explain what I mean as we go through this. So you're an investor, speculator, or gambler. I'm going to suggest you should predominantly be an investor, and if you ever speculate, you accept that you're speculating and take on that risk and accept it. So, for instance, give an example of speculating. You could say, well, if you're going into the US property market and you're basing your strategy on capital growth and speculating it's going to double in value in the next 5 years, US real estate, or triple in value, then you're speculating. But if you're going to the market going, you know what? I don't know whether it's going to rise. I'm accepting that it may not rise for 10 years. I'm going in as an investor. I'm willing to buy and hold with no capital growth for 10 years because I know I can make money off the cash flow and etc. Does it make sense? Now I'm an investor. You know, I'm going just purely, I just want to, for it to double quickly. You speculate. It may happen, but you can't count on it. Does it make sense? So you always set yourself up for success, not for failure. Okay? If you're wanted to trade Forex markets or E-minis markets, okay, they're considered more speculative trading strategies. Once again, you can minimize your risk with those by being a more committed investor. But if you're going, I've got my last $5,000 and I'm going to go and put it all on and hope for a big trade and get rich quick. Are you now investing or are you speculating? You jumped all the way to gambling because you're just like hoping that it'll work, okay? But if you know you're strategic, you're intelligent, and go, you know what, I've got X amount of capital, I'm going to take some of that capital and proportion into particular strategies. And I'm going to develop the skill set. And I'm going to be realistic and give myself the time to develop it and practice and lose money on the way at times. All traders in speculative trades are going to lose a lot of money at times, okay? But learn the process and get better. But I know I'm only trading a small amount of my capital, and then I'm using risk management strategies. Then you're putting yourself in a position to succeed because you have the right psychology. You're unattached to the outcome. If you're going, I'm just going to throw the dice and hopefully I win lotto, hopefully it all comes off. That desire to get rich quick by being mentally lazy is what stuffs people up. Who's following what I'm saying here? Because it's laziness. It's like, I just hope this works quickly so it just solves my problems. Instead of going, no, let's be strategic. Let's be intelligent. Let's map out a plan. Let's put the effort in, okay? I don't care if you want to be a plumber. You have to learn how to be a plumber. Does it make sense? If you want to be a Forex trader, you have to learn how to be a Forex trader. If you want to rent shares, you have to learn how to rent shares. But jot this down. The more skill you have, the less capital you need. The more skill you have, the less capital you need. So for instance, Forex and E-mini strategies with 10 grand, you can make decent money if you get good at it. You don't need a lot of capital, but you need the skill. Renting shares, much easier to do. You don't need as much skill. You can learn that strategy fairly quickly. It doesn't require a lot of skill all the time, 30 minutes a month. Therefore, you can make a lot of money, but you generally need more capital. But then you can do advanced renting shares and then selling insurance, etc., where you can get advanced skill, but reduce the amount of capital you need. Does it make sense? That's what you're working with. So let's say we have a share that's 16, goes up to 19, and you decide to buy it because you've done the fundamental analysis that you can learn, and you're happy to buy the stock. So you've got to know when to buy, and we need rules. You need to learn rules to do that. Number two is what we can do is get leverage. So the example I use, let's say you have $100,000. Well, let's use the example of the 22-year-old. He had $40,000 to put in the market. Then he borrowed another 40 through a margin loan is one way to do that. That's one way to get leverage in the market. Or you can use other trading tools to get leverage. You learn about CFDs and things like that we teach at 21st Century as well. Number three, if you're going to get leverage in the stock market, then what should you consider doing? Insurance. The average Australian or the average person around the world doesn't even know that you can insure your shares. They're like, shares are risky, but it's like, but did you know you can insure your shares? And they're like, no one ever taught me that. And most people don't go through life not knowing how to insure shares. So you can actually insure your positions. And just knowing how to do that, how much stress can that take out of investing? Actually, then you can actually make money. Number four is you can actually make money on the way down. Because once you learn how to insure shares, you also can be trained another strategy with it, which I like, is when the share market is falling or crashing, you can make a fortune. And most people don't realize that. So you don't have to live in panic what the market does. You become someone that doesn't react, you respond. If the market does this, I'm going to do this. The market does that, I'm going to do that. If it stays flat, I'm going to do this. So you actually can respond and change your strategy to suit what the market's doing. Because as soon as you get and go put a trade on, and then you're like, I hope the stock market goes up. I hope it goes up, and you're praying, okay? I'm not saying don't pray, but if you're praying to God the stock market goes up, okay, or the stock price goes up, what if someone else is praying on the other side of the world wanting that stock to go down? What's God going to do about it, okay? It's not God's job to have you rich in the stock market. You got God-given talent. It's called the ability to think and be intelligent and strategic. That's your God-given talent to be able to achieve what you want to achieve. Make sense? So once you're attached to something, you give away your power. Successful people is the least successful people, they are looking for external things, okay, to make them happy. They're looking for external things, etc. In the stock market, they'll invest, and I hope it goes up. They put their power in things that they don't control. Successful people don't do that. See, I often say this, I can tell whether someone has a good psychology to become wealthy by the way they get off an aircraft. Because I love watching people. I observe people. I love human psychology. So the average person gets off an aircraft, they usually are unbuckling their seatbelt before the seatbelt light comes on that you can actually undo it. They're usually jumping out, trying to get their stuff out, trying to rush to get off the plane as quickly as they can. They're putting all this energy into trying to get off the plane when they have absolutely no control over when they get off that plane. Does it make sense? Because they can't get off that plane until someone else outside their control opens the door and everyone files off depending where you're sitting. They go through their life doing that, wasting and putting all this energy trying to change things they don't have control over. When it comes to the very things they do have control over, guess what they do? Nothing. Well, that's what successful people do. They don't stress over the things they don't have control of. They're not stressing, I hope the stock market goes up. They don't give a rip because they don't control it. And if you do ever control it, you'll go straight to jail. What they're focused on is letting go of control. They're focused on what they can control. They control how educated they are. Is it true? They control how skilled they are. They control how much research they do. They control, well, if it does this, I already know what I'm going to do because I preempt it. If it does this, I'm going to do that. They control making calculated, intelligent decisions, keeping logical. That's what they control. They stack the odds in their favor, and that's the result. They become more successful. If someone has a gambling mentality, etc., they're going to become cowboys in the market. They'll blow themselves up, which is great, as long as they learn from it. If they spit the dummy and sit in a corner and be little girly men, as Arnold would say, then they don't deserve to have the better things in life either. Is that true? Okay. If you spit the dummy, what should you do? Wash it and put it back in your mouth. Okay. Pick it up, get and have a go. You're going to lose at times. Can't take a knock, don't live. Making sense? So, you can make money when the market goes down if you have additional education to know that. And you don't have to panic. And it's not over that complex. Number 5, you can actually make money on the way up plus down without even owning the stock. So then we can learn some more advanced strategies where you don't need to buy the stock to make money in it. Okay, I'm not going to go into that right now. Number 6, we can rent shares. Why I'm mentioning some of these now, because we're going to just brief over them and go into renting shares, is that it's a combination of strategies that can actually improve your results. And number 7, we can sell insurance. You not only can buy insurance from the stock market, you can sell insurance. So how John makes, you want to talk about John Thompson, 78 years old, how he's making $40,000, $50,000 a month on a portfolio of $500,000, which he only ever uses a fraction of that, by the way. He's not using that whole, he uses a fraction of that to make $40,000, $50,000. He's selling insurance predominantly, which why I teach that is because it's very similar to renting shares. When we learn how to rent shares and understand that, then what we can do is that then you qualify to learn that you don't even have to buy the shares to rent them out. You can make similar money without ever owning the shares. But it's good to get your head around renting shares first, because then it's much easier to sell insurance if you want to do that. However, it's the combination. Now, you'll hear this strategy being very common, and people say, they'll talk about the strategy out there. Most people don't understand it. Most stockbrokers, etc., don't understand it. There's certain ways to do it, but there's certain ways to get maximum return. So why have I been more successful than most people? Why have a lot of my members made a lot more money than most people? It's not just renting shares. It's using a combination of strategies with it that improves the recipe. Okay? So there's ways to always do better, and that's why we teach you the other strategies to go with it. So let's go through this very quickly. Let's give a quick example of renting shares. Let's say we're going to buy XYZ share. We've done our homework, and we buy it at $16, and it's heading on its way up. In Australia, if you're going to rent out shares, how many shares must you have, minimum? In Australia, you have to have a minimum of 1,000 shares. That's one contract, is a minimum of 1,000 shares. In the US stock market, you only need 100 shares. One contract in the US is 100. In Australia, it's 1,000. Okay? Many people prefer now to do it on the US because they don't need as much capital. That's up to you. Okay? Which market you do it on. There's still a lot of money to be made in the Australian stock market. The US has obviously a lot more liquidity and a lot greater stocks. Okay? And also the stock market's getting cheaper as well, okay, because our dollar's going higher. So 100 in the US. Let's say we, then what we can do is rent out the shares, okay. So this is you on this side of the equation. you actually buy the stock to then rent it out. What we're going to do, we don't have time today, but in our more advanced training, we'd get the newspapers out, we'd actually go through, or on the home study, we'll actually go through and look up how much rent you can get. What day is it today? Sunday. So you could actually, if you knew how, you were educated fully on this and had access to support service, you could actually do this tomorrow. Okay, so you'll be able to look up different trades, and let's say there'll be they'll have figures like 16, 17, 18, etc., and then I'll have different rental prices next to it. Okay, now let's say for this example, we find out there's 44 cents available if we rent the shares out at $17. Okay, so we have the option. We might be able to rent it out at 18, 19. We can rent it out at pretty much whatever price. There's a rental option available for us. That's up to you. We are going to rent it out the way that I teach you. We're going to rent it out below what you bought it at or above. You're going to do it above, okay? You bought the share at $16, so you're going to rent it out above that, okay? So you rent it out. You can go call your broker and rent it out for 44 cents for, say, $17. Okay, what month are we in? Let's say you're going to do this a bit late now, so we do it for next month. So it's going to be, say, December. You do it for, and let's say you have 1,000 shares. You've got 1,000 shares and rent them out at 44 cents a share. How much do you get? $440. If you have 10,000 shares, how much do you get? $4,400. Okay, make sense? That money would then be transferred into your bank account in a few days. That is your money. What have you done? It's taking you literally, we're talking 5, 10, maybe a bit more research once you get doing it, but literally a phone call once a month. You rent it out. You generate some extra cash flow on your shares, and that's your money into your bank account. Is that overly complex so far? If we had time, you went through, etc., and we teach you more advanced how to go and select these. It's pretty much how you do. What can happen though, Jamie? What can happen? What other things can happen? Well, there's a clause in this contract. Would you like to know what the clause is? The clause in the contract is this. The share price, if the share price goes up above the price you rented it out at, in this case you rented it out at what price? $17 you chose to rent it out at. If during that time of that rental period for the month up to the end of December or the last trading day of December, if it goes above $17, there's a clause in the contract that means your shares can be exercised. So you talk to some brokers like, don't do that, your shares can be exercised, and people freak out. Does that mean they take your shares around the block for some exercise? No. It simply means in this case your shares could be sold. Okay? They can be sold. So does that mean if you need to freak out? Yes, your shares could be sold. It's a clause in the contract. If they're sold, at what price are they sold in this example? $17. You bought them at what price? So there's an extra $1 per share profit there. So you, in this case, you'd make an extra $1,000 before brokerage. In this case here, an extra $10,000 before brokerage. Let me ask you this question, just like I'd ask teenagers. Is that a good or bad thing? Good. Who's with me? Is it a good thing? You be happy with that? Okay. See how quickly we're learning this? Okay. It's not that complex. Okay, smarty pants. What happens if the share price goes down? Okay, well, let me ask you a question. If you already own shares, who's owned shares in the past? When you own shares, what risk have you already assumed when you own them? They can go up, down, sideways, stay the same. True? So if you had done this, in this example, if you had rented out these shares at the beginning of the month, like we're talking about, you would have got 44 cents. Let's say you check in the end of December, the stock price has dropped to $15.50. You bought them at 16 bucks. It's dropped 50 cents. So, but you rented them at the beginning of the month, you got 44 cents. It's dropped 50 cents in paper. How much actually have you lost? 50 cents, or you've only actually lost, in this case, 6 cents a share. Does that make sense? On paper. If you didn't rent them out at the beginning of the month, you would have lost the full 50 cents on paper. So jot this down so we get this really clear. Renting shares adds no additional risk to owning shares in the first place. That is not that complex, but there's some people in this country that cannot figure that out. Oh, that's a risky strategy. Jot this down. Bullshit. There is 1,000 more risky strategies. Now, it's actually, anyone that knows what they're on about is known as a fairly conservative strategy. It's a fairly conservative strategy. It doesn't mean, yes, the share price can go down. But the renting share concept over top of it is just generating you additional revenue. Your real risk is that you can minimize your profits. What I mean by that is if you bought it at 16 and you got sold at 17, and what if the share price went to $19? By renting it out, you've capped your profit. You made $1 here plus your rent. You've capped it at 17. When if you didn't and owned it, it might have went to 19. But can you go broke making a profit? Yes or no? No. Who's happy to cap out some of their profit? You made a profit. Making sense? This strategy is predominantly the way that I teach is more teaching it as a cash flow generator, but doing it in a combination of what we teach. I don't have enough time to go into detail of it more now, but as far as that, that's what it's a cash flow generator. Let me give you another analogy. Jot this down. Imagine if you had, we don't have time to do this now, but imagine you had $250,000 in line of credit. Is there many Australians in this country that have $250,000 equity in their properties, in their house? Many Australians, suburbs full of them, but they're not financially educated. So they're going off working really hard when they could have their money working as hard for them as they are. That's all I'm saying here. There's two ways to make money. People at work or money at work. And most people are busy working themselves, but they're not working smart. I'm saying here, hey, we're not shifting much here. We're just getting educated. We're willing to have a go. Do it small, be intelligent, practice. Can you practice this on paper, yes or no? Yes. The first strategy is practice on paper. Do it on a little bit of money. Don't go, I'm going to go and borrow $500,000 and be like John next month. No, John worked his way up to that. Okay? Be intelligent, but we're just going to get our money working for us so we're not so busy working all the time. Okay? We're actually going to take some time out. $250,000 line of credit. Then if you wanted to, you could margin loan that another $250,000. That would give you $500,000 in the market when you're confident and grow up to that level. I won't mention names of stocks right now, but pretty much there's quite a few stocks. Monday, you could do this transaction where you could make $20,000 in this country right now. If you had that available, Monday, you can make a phone call through one of our brokers, take it extra straight, and you get $20,000 into your bank account. Who would like that? Okay. Now, let me think about this. How many businesses have sold in this country every month? How many people went and spent $500,000 on a business, a restaurant, a franchise, whatever business? And then they get to work in it 80 hours a week, and then they have what's called overhead risk. If I said to you, there's businesses in this country that you can borrow most of the money for, that you can insure the business, that operates with no staff, that requires no more than 30 minutes of your time a month, and can put $20,000 cash in your pocket, who would want to buy a business like that? You would sell businesses all day long. These businesses exist. They're well managed. You're buying a slice of a large, successful, liquid company, which you don't have to manage because they have professional managers. You don't have to work in it. All you need is a broker that knows the strategy and understand the strategy yourself. And doing what we're teaching, the fundamentals, buying good stock, etc. And $20,000. No overhead risk. You can go and say, I'm not going to do anything this month. It's not costing you anything. Okay? Where if you have a business, say, I'm going to go to Europe for 3 months and not work, your business, you have to, if you don't make X amount to cover the overhead, you're losing money every week. I have companies that are in business that if I didn't do anything for a week, well not me, but the companies, where they spend $400,000 a week just to cover overheads, where the businesses have to generate revenue. Otherwise you've got massive shortfalls. Where in this, there's no shortfall. You can take a month off, do nothing. What if you say, I want to liquidate my business? Imagine if you wanted to sell your restaurant or newsagent or whatever business you had. How long would it take to resell? Months, years? Are you guaranteed you get the price back pretty quickly? Business like this, you could liquidate 2 minutes. You ring up a broker and liquidate the business, and there's a liquid market for it, and you're out. What I'm saying is that if you compared this strategy to the average business, what about farmers? Do you know why they get so excited about this? How much capital they got tied up in a farm trying to make a minuscule cash flow when they can take less risk and generate off-farm income? So people that understand risk and the alternatives go, my God, there's massive potential in this. And that's just the beginning. Then you can learn more about the selling insurance, which is the next step up, where you don't actually outlay the money to buy the stock. We simply make a promise. If I said to you right now, Monday, if you knew that strategy in detail, you could make a promise, in that example, to buy $500,000 worth of stock, not actually buy it, and get the $20,000 into your bank account. Actually, you could do it on the US. If you're doing what John is doing, his level of success, he's made promises for the month, $500,000 worth of stock, $40,000, $50,000. Repeat after me. Something to think about. Okay, let's scale it right down. Lower it down. What if you only got 10,000 on that, or less and less? I'm not saying it's necessarily easy. I'm saying it's actually quite simple. The reason most people aren't doing it, one, they don't know about it, and two, they aren't following through and actually doing it. They simply don't know about it, or they get distracted. Those who actually know about it, doing it. And then they work their way up, or then they fine-tune and add additional strategies to it. Here's what I want you to do. Turn to the person next to you. Teach them very quickly how to rent shares. Other person teach back, and then I'll take a couple of questions, and then we'll wrap up before lunch break. Fire away.
Hi, Jamie.
Hi.
What happened when the share price dropped tremendously? Like, do you still rent it out?
Okay, good question. What happens if the share price drops dramatically? What I forgot to mention back here is what you can also do, part of this strategy that we teach you, is a concept of channeling. Stock will tend to go up and down. In this case, that would be channeling sideways. So as you get better at this and learn it, one, you're going to be buying, make sure you follow the rules that we teach to buy stock. Okay. If you feel at the beginning of the month that you think the share price is going to drop, well, then you may not rent it for that month. Okay, you might go, I'm just going to insure the position, or I'm going to get out of my stock. So every month you make the decision based on what you think is most likely to happen. Any investment decision, you go, what is the most likely thing that's going to happen? Okay, so if you thought the stock was going to drop rapidly, what can you do? Sell the stock. You can insure your stock. Okay. If you think the stock's going to, you look at an example here. Someone might have bought this stock at 19 and comes back a year later and still at 19, and they go, this is a crap stock. It hasn't gone anywhere. But you could have been buying and selling this stock over the course of the year and made a lot of money on it. Or you could have been buying it, renting it out, getting out, okay, getting back in, renting it out, getting out, etc., and getting rental income plus capital growth. So you're getting both of those things. That's just by being intelligent and asking, jot this down, simple question. What do you think is most likely to happen? You don't know for sure, but then you start to say, well, this is happening when I do this. If you rent it out and the share price has dropped a lot, well, if you've bought a good stock and you're happy fundamentally you bought that because you think long-term that company is a good company, you're not doing anything, you're not worrying. Because what you've done is you're bought into a position that long-term you're comfortable with. If you're a cowboy and go, I just want to get rich quick, forget about, just buy me any stock. I'm just going to buy a stock that throws off heaps of rentals. And they don't even check whether the stock is a good company. And they're not a company they want to own. Then they've jumped from being an investor to a what? Gambler. Speculator, and they don't acknowledge they're speculating, therefore they're gambling. Does it make sense? It all starts at the beginning of the strategy. Buy a fundamentally good stock. And then if you're happy, you hold your position long term if you get stuck in a trade. Okay? What the fastest way to make money is have a good fundamental long-term strategy, like you're doing, and then overlay it with short-term cash flow strategy. Okay, but if you neglect the fundamentals, you'll get a different result because you're changing the recipe. It's like me being a master chef and saying, here's the recipe, and you're going, yeah, whatever, just I want to make this thing quickly, just forget about it, just make it quickly, and just throw it together. And you throw away the fundamentals. And you changing the recipe, you might still make money, but you're becoming a speculator. Other question down the back? The same question? Do you have any other questions? Has anyone got a question like, for instance, let's go here quickly. What's your question, sir?
In our discussion came up the idea of, could you explain to us from the other person's perspective, the renter?
Yeah, why? Some people say, why would anyone want to rent your shares? Who's been thinking that? The most common question. Why would anyone want to rent your shares? Well, someone over here is going to be, there's two types of people predominant. There's institutions. Large institutions that financial planners have been selling people to put their money into, and they don't have all the money yet. They know there's 100 million coming. They have to buy positions in X amount of stock, and they're worried the stock price is going to jump up to $17, $18, $19. So they will pay an option fee or a rental fee for the rights to buy that stock if it goes to a certain price. So there's institutions that will do that because they want positions. There's people like, I talk about my brother-in-law, that are options traders. So they want to pay 44 cents as opposed to $16 to control this stock. 44 cents, they can control your stock for a month. If the share price goes up, the value of this contract is going up. They might be able to offload it to someone else for 88 cents. They paid 44 cents, they sold it for 88 cents. That's why they would do it. So they can make money. Does that affect you? You've got your 44 cents. Whatever that market continues to do is none of your business. Doesn't matter. The difference is they've bought a block of ice that will be melted by the end of the month. They have to try and offload that block of ice to a higher bidder before it melts. You've sold the block of ice, and as soon as it melts, you can sell another block for the next month and keep selling the blocks of ice. The odds are that the block of ice is going to melt. Is that true? So would you rather be the ice seller, knowing that every time it melts, they're going to come back and buy another block off you? Is that a good business to be in? The odds are heavily stacked in your favor. If you're buying the ice, you know you're buying something that has diminishing value, that is declining, okay? Has some intrinsic value, whatever it's ice, but once it melts, it has what's called no intrinsic value because it's no longer ice. Who wants it? Making sense? So they're a speculator. They're trying to offload it at a profit before it becomes worthless. You're selling the ice. The odds are heavily stacked in your favor. However, the difference they will argue is say, well, you have to have the capital to buy the stock. We're only using a small amount of money, okay, to potentially make more money. They're taking a higher skilled strategy, higher risk, okay, but they need a lot more skill because they don't need as much capital. You have a simpler strategy, you require some capital, don't need as much skill because it's not that complex, not that hard once you learn it. Some of you are going, this seems really hard. Once you learn it, therefore, you need a bit more capital. How much can you do this on? Depends where you do it on the US market, Australian market. You can learn more about that, but some people are able to, with the combination of strategies we start, well, I talked about with John, starting as little as $10,000 in the market to do that. But generally in the Australian market, you probably want a little bit more, maybe 20 grand, and then work your way upwards, okay? So, make sense? Okay, I'm a little bit over time. I'm going to stick around to ask any other questions during the lunch break. Before I do that, I'll just tell you a little bit about 21st Century. I know many of you already are members, but some of you are here for the first time. If you want to find out how to get more education about these strategies or anything that we teach at 21st Century, let me tell you how you can be a part of that. Then we'll have a lunch break, and I'm going to be back on after lunch and I'll teach you some more strategies. Okay, so 21st Century, just put this up on the screen. Thanks, Rob. Okay, what we have at 21st Century, our cornerstone program is a 5-year membership with 21st Century. So it's really about working with you over a period of time to educate you and provide you with services. Okay, so we start with our home study program. It's a home study membership, plus includes access to our cornerstone events. Our main event that I've been delivering for 11 years is a 4-day Education for Life event. We do these in each capital city pretty much around Australia and New Zealand. We'll be doing some overseas as well. We have people flying from around the world to attend these events, from the US, etc., UK. They'll fly to be able to attend because they get that information. But a lot of it, what we start with is home study. You can get started studying the DVDs at home, so you can get your foundation knowledge up. Many people don't ever come to a seminar, they just study and learn enough off that and implement the strategies. The 4-day event, though, I'd highly recommend you come to as well. It's a live event. We have a lot more time and go into a lot more detail, and you learn an array of strategies, but also you work on your psychology. A lot of people like to come because it's where they come and they actually action all the things. We're often at home, they're too busy to action the things. Okay, so just go back. Thanks, Rob. So what we have is the home study, unlimited seminars for 5 years, numerous different seminars I'll tell you about, and then there's the support services. Okay, so some of the different seminars, 4-day education for life, we have an internet and business program. These are all inclusive in your membership, so you get to study all these at your own pace over the next 5 years. Property and finance, mastermind seminar, and we also have a 1-day share renting and additional training, because a lot of people focus on that strategy so you can learn even more after the 4-day. If you haven't, you told me you watch all the home studies, if you've studied the 4-day, if you still haven't got your head around it, then you can come back and learn more until you fully get your head around it. But it's not really that complex. Usually after a 4-day, most people are able to start trading, or when you study the home study, start doing the strategy. What we're talking about here is strategies that if you had the knowledge, you could be doing Monday, effectively. Okay, these exist. This money is in the marketplace now. So also what you receive, 21st Century members receive a bonus home study, and also the internet and business home study. Some of you may not be into the internet, but it just teaches you additional skill sets to boost your income. Also, if you wish to become a 21st Century member, some of you are going to get some specials today, but if you pay in full as a 21st Century member, you'll get some additional bonuses there of additional programs. The support services, we have an array of services available, so some of you will want to be able to, a stockbroker that you can ring up that understands the strategies, or you might want to be able to use 21st Century accounting, or 21st Century finance, or property selection, different services so you're not left on your own. There's nothing more frustrating. You learn all these strategies and you go and talk to your local accountant, and they may be overly conservative, or they just don't understand, and they're not sort of supportive of what you want to do. It can hold you back. Okay. Where are the events? We have events Auckland, Melbourne, Adelaide, Queenstown, Sydney, Perth, Brisbane, Gold Coast, and also planning one in Bali next year. As a 21st Century member, you can attend any of these locations. You can attend as many times as you want over the next 5 years. So you can come back as many times as no extra fee. Okay? That's all part of being a member. Okay? What are the conditions? To make this work, we as an education organisation can provide you with the education, we can provide you with the support services. You need to play your part. Part of that is you need to be 100% committed to anything you do. Just commit and take action. Honest with yourself where you're at, what we talked about before. Develop a healthy relationship with money, where you're at now, and let's chart a plan. Consider giving 10% to charity. I talked about that. If you get the results you want and you're happy with 21st Century, we ask that you refer 3 other friends to us. That's how we mainly grow, is through referrals, and we'll make available some free education as far as DVDs and magazines, etc., to your friends. They can study that, and if it's something for them, they might want to become a member down the track. Be prepared to step up and take action. There's no room for excuses. There's no room for cowboys. We're not interested in people who want to be cowboys. We're not interested in people who want to get rich quick. We're interested in people who are willing to be dedicated, committed, put the effort in, and over time to deliver those results for you. Some of you will be able to deliver results faster than others because the position you're in where you can take advantage of some of these things in the next 30, 60, 90 days. Okay. What else do you need to know? If you could access everything included at 21st Century for free, if this was all free, you could learn all these things at your own pace, who would find the time to do it if it was free? Okay. Most people want to do it. Well, I have some good news for you. And I have some bad news. Who wants the good news first? Okay. Well, the good news is, as a 21st Century member, you have a 90-day money-back guarantee, so your investment with it, if it's not for you, the conditions to the 90-day money-back guarantee is fairly simple. We ship you the home study, get started, you have a full 90 days. All you have to do is attend a 4-day event in that 90-day period, and by dinner break day 2, after you sat through that, if it's not for you, just hand back your materials. It costs you nothing. So is that better than university? When you go to university, they say, if you don't make a lot of money and you don't do really well from our degree, we're going to give you all your money back. I don't think so. If you don't even show up, they don't care. Okay? So there is an investment to get your education. We do provide a lot of valuable education. I'll also tell you in a moment about scholarships as well, for some of you that will qualify for that. Your investment to become a 21st Century member, you get all these things that are valued, the support, the home study, the tickets to the events, an array of events. That's valued over $20,000. I invested to learn this knowledge a lot more than $20,000. Okay, I invested literally tens and tens of thousands of dollars, and I continue to educate myself and make that available. So your investment is not $20,000 though, it's a fraction of that. 21st Century membership is $4,995 Australian dollars. Okay, we don't accept US dollars anymore for our friends in the US. If you're a good decision maker, who's a good decision maker? Raise your hand if you're a good decision maker. Some of you are like, I'm not really sure if I'm a good decision maker. That gives me some feedback whether you are or not, okay? If you're a good decision maker and wish to enroll, then you can save $1,000. Those watching on video, DVD at home, you have 21 days to decide whether you're a good decision maker. If you enroll in that period of time, you save $1,000. Or you can do a payment plan and you can pay it off over a period of time, $125 a week. Teenagers, who's a teenager? A few adult teenagers. If you're a teenager, you get to come for free to the event, so the adult member can bring a teenager to the event. And what else do you need to know? There's also a bonus for you. You can also, if you enroll inside 21 days, you can bring your spouse to the event at no extra charge. So it includes a spouse ticket. So it's very good to do it together. Okay, just same mindset, etc. Part of also being part of 21st Century, you get to become part of our family. You get to be associated with like-minded people, create a new peer group. You create a lot of new friends, and that can hold you to a higher standard. And also people you can bounce ideas off. There's massive resources amongst the members throughout 21st Century that you can learn a lot off, and you can stay connected on Facebook or through our forums. There's some events coming up. So there's quite a few of those different events that you can take advantage of. You can check the website later. And there's 2011 and 2012 events as well. A couple of success stories. I think I forgot to tell you a little bit about this one. I get Facebook or messages all the time about different success stories. Young guy, Mark McDonald from Melbourne. He says, I was awarded one of your youth scholarships at 21st Century Academy about 2 weeks ago. I just wanted to tell you a big thank you and tell you exactly what the results have gotten so far. Using the idea of creating the perfect environment to work from, led into negotiating a 12-month lease on the 21st floor of the Rialto Tower in Melbourne, which is one of the largest towers in Melbourne. He says, I'm pretty sure I'm the only 18-year-old with an office there. He's been using some of the strategies to overcome procrastination and get more done. He's increased his income from an average of $500 a week to $3,700 a week. He just updated it recently and said it's now up to $6,000 plus a week. So just by changing his focus, he also, you see down the bottom there, he basically said, before I thought I was too young to be successful. Now he realizes being young is an advantage. By changing his mindset and his belief system, he's been able to increase his income dramatically as a result of that. Another testimonial, you can go to our website and read story after story. Attended the seminar back in March 2006, set itself a target of making $500,000 from the stock market in the next financial year. 3 weeks ago, she hit the target and did it in 10 months, not 12. Who'd be happy if you made $500,000 in 10 months, not 12? I'm sure she's really disappointed she missed a target, or she actually overshot a target in that case. John Thompson, I've told you about John before, making $40,000 a month, $3,000 in his first week, so he did the course. He made his money back on the course in his first week of share renting, $7,500 in his second month. Then he shifted into the selling insurance strategy. He's built that up. He started that with $10,000. He sold one of his properties to boost his capital. He's built that up over to $500,000 now. He's making 8 to 10% most months doing this strategy. I talked about renting shares, and then he's changed that now where he's selling insurance, which is the next step on of what we teach you how to do that. And you can watch that interview of John if you want to learn more about that. Just go to our website, 21stcenturyacademy.com, and you can take advantage of that. At 21st Century, we recently launched our scholarship programs. Just jot these things down, and then I'll tell you about, these are what we call our charity scholarships. I'll tell you about the commercial ones in just a moment. Some of you have questions. If you qualify for a 21st Century 5-year scholarship, what we now do with 21st Century, it's really being changed. 21st Century Education to become a non-profit educational organisation. My passion is to make this education available to as many people as possible. It costs an incredible amount of money to make that available and to run an organisation. We have close to 100 staff in our different companies. It doesn't, some people say, why don't you educate everyone for free? I'm saying, well, I would limit the amount of people I can educate. I make a lot of education available to a lot of people for free, but also I think, when people are committed and invest some money, they actually get a better result. However, there is scholarships available. If you're 21 or younger, you qualify for a 21st Century 5-year scholarship. people that get the scholarship, you get all the benefits, you attend all the seminars, you get everything. The only difference is your home study is online. You get the online version as opposed to the hard package sent out to you. This is the actual, you get a whole box and all the different things that are shipped out to you. If you're a paying member, if you qualify for a scholarship, you get it as online, you just watch it online. Okay, that way we can make more scholarships available because it costs us less to do so. But you get all the other benefits as far as attending all the events, everything's the same. If you're 65 or older, you can qualify for a scholarship. If you earn less than $30,000 a year, you qualify for a scholarship. If you have migrated to Australia in the last 18 months, you qualify, or if you're Aboriginal or Torres Strait Islander descent, then you can qualify for what we call our charitable scholarships. Does that make sense? Hand out the forms very quickly as well, some of you. Now, so as I said, it's not for everyone, 21st century. However, if you're open-minded, you're committed, willing to have a go, your upside is this. It's 90-day, 100% money-back guarantee, so your risk is zero. So if you do this, it's not for you for whatever reason, it's free. You get 90 days to make up that decision. If it is for you, though, and you learn these things and apply them, what value can this add to your life? And I can remember looking back on my life, 15, 16 years ago, I was challenged to start changing the journey. One of the things my mentor said, Jamie, he said, you need to go and invest in your education. And I didn't have any money. So what I did is I didn't have any money and I needed $1,000 to go to a particular seminar. So what I was able to do, I didn't have the money, but I had a sister. And I convinced my sister, I said, I'm going to go to this seminar, it's going to motivate me, I'm going to learn different things, it's going to change my life. You know, if you loan me the money, I promise I'll pay you back. And it's so important for me. I just knew I needed to be there. I was committed. So I borrowed $1,000 off my sister on a credit card. Please remind me to pay it back sometime. Just joking. And as a result of that, I got started on my journey of educating and investing into myself. Now, if I had made excuses, said, oh, well, I don't have the money, then, you know, or whatever excuse, don't have the time, and didn't follow through, you know what? We wouldn't be having this conversation today. I wouldn't have achieved anything of what I've been able to accomplish. All because I was willing to invest in my education, not just in a university education, but in a modern day education to develop the skill sets that I've learned. So for me, I think the price we have to pay to get the things that we want is small. The bigger price to pay, if you don't master these things, you don't learn these things in detail, how much revenue per month can you be missing out on? Okay, how much per month? A lot of people miss out on a lot of revenue of what is possible, but just redesigning your life, just taking it to the next level. It's worth more than that. I could comfortably charge $50,000 for what you learn through 21st century, and I'd be perfectly comfortable with it. We only charge $4,000, you can pay it off, and it's not for you, it's free. So I don't think we can be much more fair or genuine than that. Then we now have available these youth scholarships, and in just a moment, I'm going to tell you about the commercial scholarships. Some of you were told that if you come today, because we're filming, I only do this event once every 2 years, you would have received an email that you qualify for a scholarship regardless. So who got an email like that? Probably everyone's going to put their hand up now whether you got it or not, okay? So what you do, so anyone that's here today, if you're not a member, you will qualify for a scholarship. You get all the benefits, you just get the online version of the home study, not the hard copy. So you have a form there in front of you. Does it make sense? Who's excited by that, by the way? So you can come to all the events. Just for being today, you'll promise, you know, some of your members are able to bring your friends today. And the promise was, if you're here today, because we only film this event once every 2 years, a gift for you is you get a 21st century membership at no charge. If you wish to do that, you need to fill in this form. Okay, can I have a copy? So the top part just relates to this, but what you're going to do is you're going to just scribble there and put, I want you to write commercial scholarship. Okay? If you qualify for the other scholarships, that's what we call charitable scholarships. So if you're under 21, over 65, you can put charitable scholarship. It's just for our internal referencing that we know. Okay? Now, make sense? Now, if you're like, I don't want a scholarship, I'm quite happy to pay for my education, then you can pay as well. We'll process your credit card. Now, some of you will have this question. You'll say, Jamie, I don't want to watch it online. I want to get the whole package, the hard copy home study sent to me, everything in the hard copy version. If you want the hard copy version, you can order that. Because you're getting a scholarship, you don't have to pay the normal $4,000. It'll be $995, and you can have the hard copy version posted to you, okay, if you want that. You just need to write on the top there, there's no box for it. Okay, just have to write, I want the hard copy home study shipped to me. Okay, you still get the 90-day money-back guarantee on it, and put in $9.95, and then you just have to fill out your details wherever they take your credit card on the back somewhere. Yeah, if you want the hard copy, so it's a scholarship, you get the home study online, you watch it online. If you want the whole box and everything, all the manuals and the DVDs, 150 hours, a hard copy of the home study shipped out to you in the next couple of days. It'll allow 7 days, but usually they will ship it tomorrow for you. If you want that, $995, okay, and they'll ship that out to you. So you'd need to just simply write that instead of $3,995. $995. So cross out the $3,995, that's the normal price, okay? Just put in $9,995, ship me the home study, and they will do that for you tomorrow. They'll get those orders out. For $995, yes. $995. Does that make sense to everyone? Any questions? Big session, huh? I'm so over time, they're going to be doing a lot of editing on that one. It's meant to be a 3.5-hour seminar, went for about 4.5 hours. Any questions before we wrap up? Everything. The whole works. Yeah, big question, yeah. Oh, you can still watch it online, but when you get the hard copy, you'll watch it on TV. It's much easier to watch. Okay. If you're an old member, yeah, this was released 9 months ago. So this is an updated version from 9 months ago. So if you're a home study member already and want an updated hard copy, it's $295, and they'll ship you out the new copy. Okay, $295 you can do that any time if you're a member and get an upgraded newer version. Because they're upgraded every 2 years. Some of the old stuff is still on there, but the newer, latest seminar is on there. Yep. No. You can watch it ongoing, yes. Yep. It's 150 hours, so that's why. There's a lot of information, so you might get sick of watching it online. Okay. We're going to be taking a 59-minute lunch break, 59 minutes. When you come back in, I will be teaching you, I'm going to just go to a short session with you. I'll be teaching you about Business Academy. I'm going to teach you some business strategies, let you know about Business Academy. Some of you want to be entrepreneurs, etc., or already are. And then a couple of opportunities I'll talk to you about. Then we've got a host of other speakers. Later today, you will be who wants to learn more about the US property market? Okay, we have a speaker flying up, or if he's not already here yet, they're going to be filming that as well. He will teach you about the US property market. This is brand new stuff. It's only being released as we speak to our members, so you'll be one of the first people to be able to learn about the US property, what's going on, and that will answer most of your questions. So don't miss that. That's worth a lot of money to you.